Good afternoon, good morning, good evening, wherever you are in the world. I hope you're having a great day. Hi, my name is Brian. This is Autobahn Investing, and welcome to another amazing video. I'm really excited today because I'm going to start a new segment and pick one stock a day at the end of this video to highlight from a technical perspective, a fundamental perspective, and to talk about, am I considering this or am I in this from an investment perspective or a trade? And so I'm going to do that for the first time today, and I'm really excited about that. So, and of course, talk about my watch list and what's going on there. So, if you would feel so inclined, go ahead and hit that subscribe button, hit that little notification bell so you're notified every time I put out a video. It's been a couple days since I've done a video, so I apologize for that. Life got in the way, but I'm back at it. I'll do one every day this week, and I'm real excited about that. And let me get this out of the way right out of the intro. I'm not a financial advisor. I'm just a dude with a computer that likes playing with this stuff and talking about this stuff. It's definitely just a hobby for me, so please don't buy or sell anything just because I talk about it on this. But hopefully you learned something and maybe you're a little entertained along the way. I'm talking really fast because I got a lot to talk about and I'm really excited. So let's just jump right in. All right, let's start with Virgin Galactic. Here's the daily chart on Virgin Galactic. And as you can see, on Friday, we came down. We opened up below the 50-day moving average and closed right on it. And today traded on a very nice market day, on a very nice market day, marginally above the 50-day, just marginal gains in this. I mean, 2.5%. But it's got a big gap to fill up to 42.50. So, and you can see the MACD is still coming down. And so, look, it's getting really close to what I would consider buy time for Virgin Galactic. Friday's move would have scared a lot of people, a lot of sellers out of this name. This whole move down from the breakdown from the middle of February continues, and I think that still continues. I've got a lot of large position in Virgin Galactic today, as of today, but I will be adding to it at the following price points that I've got priced in here. So around 34.50 for a break below that 35, I've got a small. Down to 30, I've got another buy order in. And then down to the 27.75 in anticipation of this gap right here being filled. And I believe once that's done, it'll be off to the races. Now, will it get down that low? I don't know. It's getting very close to very nice support here, which is around the 30, just shy of $35, right? So, we'll see if it breaks down below that. It's going to scare a lot of people if it goes down below that. But you can see up here too, on the RSI, it's now in the oversold category too. So I wouldn't be surprised to see a short-term bounce up to around the $50 mark. Just enough to get everybody thinking to FOMO into this, that it's back off to the races. I wouldn't be surprised to see it move back up to 50 in the short term before dropping down to the 35 to the 30 level. But that's what I'm seeing right now on Virgin. The fact of the matter is, Virgin is behaving exactly like it should be. It's still very much in a positive upward trend move. Not if you're a momentum trader, but if you're an investor, this stock chart is doing exactly what it's supposed to be doing right now, and is by no means broken. But it can have some short-term pain and emotionally stress the hell out of some people before it starts moving up. But from a technical perspective, it's doing exactly what it should, and so it's very easy to trade this. I would suspect to either see some consolidation around the 50-day, a move back up first to follow some Elliott wave theory, and we can chat about that later. But to move back up to 50 before coming down to 30, I actually think, I'll say this before moving off of Virgin, I think it's better for the stock to hover between 35 and 42. To bounce around there for a little bit and to form a channel, than to shoot back up. If it shoots back up to 50 and you're in it right now, you might want to consider taking some off the table and waiting for that move back down to 30. Because I don't believe a move up to 50 is going to be, the next move up to 50 is not going to be a breakout kind of move. It'll be enough to get people that sold on this wave down. It'll be just enough to get them thinking that it's going to go north again to buy back in and chase it, and then they're going to get hurt again. And it's that hurt again that's going to take it down to the 30. That's what I see happening in Virgin. Next, I wanted to talk about KE Holdings. Again, a pretty poor tape the last couple days. We tried to break out last week. I bought in anticipation of that breakout that went up to 77, let's call it. It's still hovering RSI around the midpoint, and MACD has now made a negative crossover. I want to see if this swings back up. I'm still in options with a March strike price on this. This bounce off of the 50-day I found encouraging today. I obviously want to see it break above this 77 to get it real excited again, but I am still in this name. I am down about 40% on my options, but we'll see what tomorrow yields. A break again right now below that 50-day moving average is gonna stop me out. I'm just gonna move on. But I want to see if in the next day or two, if we get some pin action off of today's move in the Nasdaq and whatnot. I want to see if this can get some wind in its sail again. But again, my stop is now really tight because of that 50-day move. Whoops, what do we got going here? Another ad. We can't have enough ads, can we? Got to have ads right when I'm doing. Let's try to do it over here. Got to have more ads. Love these ads. Okay, QuantumScape. So QuantumScape moved above the 50-day and now is resettled in a very tight range today on very low volume. I believe that today's the day to buy back in. I think this action is very positive, and it's just flatlining. This move, it really depends on where this MACD goes for me. If this MACD comes back negative, I'm out. If this stays, it can bounce up here and start gaining momentum again. I'd love for it to get close again tomorrow to the 50-day moving average. Last Thursday, we opened up on the 50-day and came back down. We've had the last 5 trading days below it. It's time for this baby to get back up above the 50-day. And if that happens in this week, it's very positive for the stock. If this MACD comes back down negative, then I'm out. It's as simple as that for me. It's very binary, I guess is the word I'm looking for on QuantumScape for me right now. But I'm telling you, if it can break above this $68 or so, it's going to fill this gap to around the $85 very quickly is what I expect. That's why I'm in it. That's what I'm hopeful for. I talked about AT&T a lot last week. God, I hate being wrong, but boy, was I wrong on this. I saw volume coming in. I saw a nice move off of this base, and then a total collapse and a close below the 50-day. MACD's now crossed over, coming down. Ugly chart. It's going to fill this gap to 27 is what I suspect is going to happen. I'm not as convinced of that enough to buy puts on it, but it's enough to stop me out of it. And so these, I had some options on a March strike of 30, which I bought for 30 cents or 40 cents, whatever it was. I got stopped out of that, and I'm out of it. I was asked recently a question on AMC. I'm not playing in the AMC game or the any of these Wall Street bets, the GameStop stuff. I just don't trust it. And look, people are making hand over fist on it, so hats off to them. But it's just to me, I can't watch it full time. But that being said, there's a lot I like about this chart. I like the fact that we've had a positive move again, and it's on the PPO. Let me go back here real quick to there's what I'm looking for. So RSI has turned back positive, just barely above the midpoint. Certainly not oversold right now. And then we just had the crossover in the MACD. Today would have been a good day to buy. Will it consolidate a little bit above this 8? It could. My stop would be a close under this 8, but it's actually a pretty nice risk reward when you think about it right now. With a stop below 8, a gap to fill up to about the $13, and heaven forbid if this thing goes up to the $17 mark, this thing and breaks above that, this thing's off to the races. And we all know what GameStop did, and the same crowd is playing in this. So with speculative money, this might be fun to mess with, and I'll be looking at this a little bit tomorrow and thinking about it. But the problem with this stuff is you can't think too long because it'll take off without you one way or the other. And on Robinhood, I don't know if there's limits on it now, but they put limits on it before and all that. We all know about that nonsense. So anyway, out of these GameStop bets, these Wall Street bets stocks that have been talked about on CNBC and whatnot, I actually think AMC from a technical perspective is looking pretty damn strong right now. We've got volume coming back in. We have that crossover in the MACD, and that RSI is not unreasonable. And so where this goes from here, it's anybody's bet. But it's looking the chart looks pretty damn good right now. So anyway, I'll be considering this as a later on in the week, if not tomorrow morning, to jump in on this action. So anyway, that's what I got on my watch list right now. And now I'd like to move into a new segment on this and talk about the stock of the day. So let's do that.
All right, today's stock of the day is Coty. And now I'm not much of a makeup guy, admittedly, okay? But I am a make money kind of guy. And so I want to talk about Coty. I want to talk about it from a fundamental perspective as well as a technical perspective. And do I see it as a investment for this year, or am I just looking for a trade out of this? So let's just jump right into the stock of the day, Coty.
Okay, first let's start from a technical perspective. So first of all, the MACD, and I guess you can't really see it on this chart, though you can see it over here. Let me take it back a step. Sorry about that. I should have had this better organized here. The MACD is flipped positive and is trending upward as of about the maybe the third week of February or so. The stock formed this beautiful base since the end of November, tried to break out around the February 7th mark. And then on the 8th, it had that failure and it gapped down on the, and this was in anticipation of the earnings, and the earnings were actually pretty good. It was a beat, but what's gone on here is it wasn't a beat enough, I guess, and it brought the stock back down. Once they realized it wasn't going to continue that climb, it came back down, hovered below the 50-day moving average. Then the next week bounced around that a little bit and started to show signs of life about a week and a half, 2 weeks ago. I got into options on this about a week ago on the April strike price of $8, which we're trading at about, I think I got in here at around 80 cents or so. So what's gone on with this stock? Well, here, let me take from another technical perspective real quick and what this chart says. So the chart showed at the beginning of November, it moved from around the $3 up until more than doubled, about almost hitting $8 a share. So about 160% or so increase, about 160% increase or so in the month of November. Beautiful breakout, and then has formed this nice base. And so if we look down here on the weekly candles, it looks more like a cup with a handle being generated here. We could see 3 or 4 weeks here of consolidation around this $8 mark, which is why I pushed my strike price out to April. But I do expect a breakout above the $10, hoping to make a 3-to-1 or so ratio on those options I bought. And if you look at the point and figure, and I love the point and figure here, it's had a nice bounce off of the 755 mark 3 times and is now showing a break above or getting ready to break around this 825, which is where it's at again. Anything above the 830 to 850, let's call it, on volume, like here, we've got to see this volume break above this trend here. This was an anomaly, and so I don't pay much attention to that. I want to see something similar to this spike in volume coming in out of this $8 mark. Okay, so what originally caught my eye to this stock is this Barrons article, which was about 2 weeks ago or so, February 12th, and I'll read a little bit of it. So the Coty is the parent company of CoverGirl, which I've heard about because I've seen the commercials. Kylie Cosmetics, which is the Kardashian brand. They own a 51% stake, which it talks a little bit about it in here, but they got hit because they bought for $600 million. And a lot of folks were saying they overpaid for this brand. We'll talk about this in a second because I want to show you an interview by their CEO. But anyway, it goes down, and I guess, and I'll put a link to this in the comments so you can read it all if you want to. It's not that long, right? But this last sentence, or last paragraph, but the upgrade really came down to one thing, an upgrade in management, right? So this analyst who put a $10 price tag on the stock, up more than 40% from Friday's close, which was $6.75 when this came out. Sue Nabi, the CEO, has quickly attracted high-quality talent to unlock the value trapped in Coty's brands. And I encourage you to look at, even on Wikipedia, just go look at Sue Nabi's resume on Wikipedia and her tenure at various very high-end Estee Lauder and whatnot brands. And her ability, look, the number one role of a CEO, the number one role thing that they need to do, just like any other coach, is to field a winning team. And so has quickly attracted high-quality talent to unlock the value trapped in these brands. Well, that means a lot to me, quite frankly. I want to play, because one of the reasons, two reasons why this stock has gone hit so badly over the last couple of years. One's the CEO's problems. They've had a revolving door in the CEO position. And two, well, I'd argue their debt position is certainly a headwind to the stock, but also overpaying for Kylie. And look, think what you want about Kardashians, right? But they know how to make money. You can't argue that. And this was an interview Sue Nabi did on CNBC a couple of weeks ago, and I want to play about a minute of it. So about this Kylie thing, and so listen to this.
Wanted to obviously ask about Kylie Cosmetics. What's the growth rate? Is it growing faster or slower than before you acquired this big stake in the JV?
The second quarter of Kylie has been in line with the growth we had on the first quarter. And at the same time, we have our skincare business that is growing quarter after quarter and compared to the year before, which is great news, especially in the middle of this pandemic, because again, even if skincare has been benefiting from what I would say a wave of self-care at home, etc., it's still difficult to go in stores to try new products. So the good news is that Kylie is booming on this area. And the other good news is that we've seen that this unique model of launching products, Kylie is the inventor of what we call the drop model. She listens to her hundreds of millions of followers. She creates very, very quickly, very nimbly collections that are put in front of these hundreds of millions of followers. And we have recent examples of, the Grinch collection in December, or the Cheetah collection, or even the Advent calendar on the skincare side, that all sold out in sometimes 5 minutes, sometimes 20 minutes, reaching, turnovers of several millions of dollars per day, which is really very unique. And this area, we're going to continue to strengthen this area and to make it stronger in our.
Okay, a couple things here. One, I love the use of the word booming when it comes to sales. Secondly, we're talking about innovation in cosmetics, just like we would innovation in a technology company, right? And listening to her customers, well, that sounds transformative. Certainly we in tech have been doing that for years, but applying that type of mindset to cosmetics, the fact that that's innovative is that says a lot about the industry, I think, quite frankly. But now she's talking about selling out product lines in 5 minutes or 20 minutes. And I mean, that's certainly something that's very encouraging. So did they overpay for this line? Maybe, I don't know. But it seems to me when we're talking about booming sales, we're talking about innovation in the product line, we're talking about selling out that product line in 5 to 20 minutes. Those are certainly tailwinds for any equity. Now, I look at the market cap of about 5.8 billion with an enterprise value of 12 billion. I think that's great. Forward PE is around 30 or so currently. What is concerning, let's see if it's on here. Obviously profit margin, those types of things, but are they going to grow into that is what's the real question. The big concern I have in a rising interest rate environment is around this balance sheet. We have 550 million or so in cash, but we have total debt of 5.7 billion dollars on an enterprise value, by the way, of 12 billion with a market cap of almost equal to their total debt. That's an issue. And now, I haven't dug into when that debt's due and all those things, but they are generating a leveraged free cash flow of around 500 million as well. So that's pretty positive. Certainly, there's no short interest in this to really warrant a short squeeze. So the Wall Street Bets guys can ignore it. But but that's where we're at from a financial perspective. And then the number of analysts covering it expect in the current quarter is about a penny. But the last couple quarters, and I think I can show it right here. Let's see. Well, sorry, I just messed that up. But the last couple quarters have gone really good under. Let's see here. I think where you can see some of the stuff I've looked at here. There we go. That's what I'm looking at right here. This current estimate. So we beat the last two quarters, 4 cents, 5 cents. We've got about a 1 cent estimate on this quarter. I really do think now it's May timeframe when next time earnings get reported. But as you can see, it looks like Q2 of 2020 is when they threw the kitchen sink out, with meaning the old CEOs, new CEOs. Let's get all the garbage out on the table. And that's when that happened. So it would not surprise me a reasonable beat of about 5 to 10 cents in the current quarter as well. So full swing here. I'm at 10 minutes, so I want to wrap this up. I don't see this as a long-term investment. They need to get their debt under control. They need to get that growth rate going and hit some expectations. But in the near term, between now and April, I am expecting this to go to at least $10. We've got a small gap to fill at around 850, and once that gets cleared, that's the resistance, and this thing is off to the races. Now, we have a nice trend line coming up here, and so I want to see that maintained. But really, on the downside, anything below 750, if you're going to buy the stock, you're 745 or so, right down here would be a good place to put in a stop. And I think it's a safe time to buy, especially right now for a momentum trade or a swing trade with a break above this 840 on strong volume. That makes it so that we're not going to be seeing much of a handle here. We're going to see this thing explode up. That's the way it's looking to me. So I'm trading it on the options market with $8 strike prices on the April strike, $8 price on the options market, which are currently trading at around 97 cents or so, 96, 95 cents, something like that. Anyway, hope that helps, and have a great evening. Thanks, guys.